This is my second in the series of videos of where I think the property market is and going in the COVID-19 world. In this video I want to look at the strength of the property market. So as mentioned in my introductory video, the property market going into 2020 was strong, positive, optimistic. Everything looked great for sort of good years ahead. Looking at this recently issued House of Commons briefing paper, tackling the undersupply of housing in England, March 2020. Clues definitely there in the title. So looking at this summary, household growth is one factor affecting overall housing need. Number of new houses in England is projected to grow by 159,000 per year based on current trends. The backlog of existing needs for suitable affordable accommodation is often cited as another pressure on the housing need, as it is demand for more than one space by households that can afford it. Or second homes, I guess. There's been a range of research into the amount of new housing needed, and this is an important number, which is estimated at 340,000 new homes per year. So we're building 159,000 and we need 340,000. The government target, which it continues to fail to meet, is 300,000 new homes per year. That's still 40,000 short if they did meet that target. There is geographic variation in household growth and housing need, with more need in London and the south of England. So where you live might make a difference on the housing growth. The main takeaway from that is we need 340,000 houses a year. They're building 159,000. That's about, what, half? You know, simple supply and demand. If we're not building enough homes, the demand for homes is there. It's going to push up prices. So talking about prices, if we look now to a recent RICS survey, it's telling us new inquiries fell from plus 17 in February to minus 74 in March. But that is mirrored in the fall of new instructions from plus 11 to minus 72. So as long as those numbers remain balanced, it means there's no forced sellers out there, there's no undue demand out there. So that would suggest to me house prices should remain broadly level. Now, comparing the COVID-19 recession to previous recessions, ordinarily recession is preceded by a large amount of price growth going into it, and then that falls away in the recession. That's not something we've seen in this COVID recession, maybe because it's not an ordinary recession, it's brought about by an external force, you know, COVID, rather than economic factors. So we've seen fairly modest growth going into the recession, generally postulated that because we've had that sort of slow and steady growth rather than sort of explosive growth, that it's unlikely we're going to see huge falls in the property market, although I would anticipate some falls in the short term. But the long term is what we're looking at because we're professional investors. So I think in that regard, that looks pretty good. Other factors helping the property market, almost zero interest rates we're seeing now. They've been unprecedentedly low for a long time, and now they're just, as close to zero as you possibly be without being zero. I'm not sure if that's something the Bank of England would ever do, is set it at zero, but who knows, we're in crazy times. The other big help to the property market is the government has stepped in. The furlough scheme and various other schemes supporting the economy, supporting people. So unemployment is not the spectre of doom that it could possibly be. Speaking of unemployment, if we look at this graph, whose data is based on the Office of Budget Responsibility, taken from a Savills presentation, we see that whilst unemployment is expected to shoot up in the very near term, it's going to quickly sort of come back down and return to almost current levels. In a similar way, the GDP forecast, obviously it's going to be catastrophic for the time we're in lockdown. It's tough to spend money right now. None of the shops are open. You know, even though we're in lockdown with tons of time on our hands, until recently we haven't even been able to go to a DIY store to buy a tin of paint to do some work on the house. And the general uncertainty in the economy will always stop people spending. So we're seeing a catastrophic drop in GDP. But similarly, that's expected to bounce straight back. As soon as we're out of lockdown, we're going to have a corresponding massive rise in GDP. So the economy, after a turbulent year or so, we're expecting that to bounce back too. The key takeaway for me there is the property market was strong going into this COVID-19 shock to the system, and the fundamental is we need 340,000 new houses per year, and we're only building 159,000. With that kind of shortfall in supply, demand can only push up prices. So I would expect the property market to continue to outperform. I hope that was useful. I'll see you on the next one. Bye bye.
Please don't forget to like, subscribe and comment. Thanks. See you on the next one.